All right, welcome to the Explainer. Today, we're going to tackle a big one, decentralized finance. DeFi. But forget the dry, boring textbook stuff. We're going to do this by following the story of someone, maybe a lot like you, who started with just one simple question and ended up unlocking a totally new way of looking at their money.
So this is it, right? This is the question that really kicks things off for so many people. You've got some crypto, you believe in it, but it's just kind of sitting there in a wallet. It's not doing anything. And it just feels like, man, there's got to be a way to put this to work.
And that's where we meet Alex. We're going to follow Alex's journey, from having that one thought to diving headfirst into the powerful and, sometimes pretty intimidating world of DeFi. So, let's jump in.
Okay, so Alex's journey, like a lot of people's, started with the most basic idea in all of DeFi, taking that crypto that's just sitting around and putting it to work through lending.
Now, at first, you might think, hey, that sounds just like a savings account at a bank. And you're not wrong, but there's a huge difference. See, instead of a bank in the middle, DeFi uses something called a smart contract. The best way to think about it is like a super smart vending machine. You put your crypto in, the code automatically lends it out, and it spits your interest back to you. No bankers, no stacks of paperwork, just pure automated code. And the best part? You're the one in control. And what's really cool is how transparent it all is. You can see your potential earnings, the APY, right there. But here's the thing you got to remember. Unlike a bank's rate that's set in stone for a year, this number is alive. It's constantly changing. It's all based on simple supply and demand. If a lot of people want to borrow, guess what? The rate you earn goes up. So you might be asking, well, how am I protected? What if someone just runs off with my crypto? That's where collateral comes in. To borrow, someone has to lock up assets that are actually worth more than the loan they're taking. This whole idea is called over-collateralization, and it's the safety net that's literally built into the code. It's the system's insurance policy.
Okay, so with those key ideas under their belt, lending, APY, collateral, Alex was ready for the fun part, actually turning that crypto into a source of passive income.
And look, they started small. This is probably the most important rule of all. Just 1 ETH. This wasn't some get-rich-quick scheme. Nope. It was all about learning the ropes, seeing how it worked, and sticking to that golden rule. Only play with what you're truly okay with risking.
And pretty quickly, Alex figured out that not all lending pools are created equal. This right here is a perfect picture of that classic risk versus reward trade-off. You could lend out something volatile like ETH and get a higher APY, sure. Or you could play it safer with a stablecoin like USDC for a lower but way more predictable return.
And this was the big aha moment for Alex. It wasn't really about the few bucks they were earning in interest. It was the feeling of being in control, of being in the driver's seat of a system that was totally transparent and automatic. You can see everything, you can choose your own adventure, and you can do it all instantly, without having to ask anyone for permission. That is the magic of DeFi.
All right, so Alex is feeling pretty good about this whole lending thing. They're ready for the next level. So let's flip the script and talk about borrowing, because this is where a whole new world of possibilities and responsibilities opens up.
So the first big new term Alex has to wrap their head around is loan-to-value, or LTV. It's actually pretty simple. If your collateral is worth $1,000 and the LTV is, say, 50%, you can borrow up to $500. Simple as that. This number, this ratio, is your main safety lever. The lower your LTV, the bigger your safety cushion.
And that cushion is so important because of this next word, liquidation. This is, without a doubt, the single biggest risk when you're borrowing in DeFi. If the market takes a dive and the value of your collateral drops too low, that smart contract will automatically sell it off to repay your loan. There's no one to call, no one to plead with. It's just cold, hard code doing its job.
So Alex saw the difference right away. Lending? That's kind of set it and forget it. Pretty passive. But borrowing? Whoa, that's an active sport. You have to be paying attention, you have to be vigilant, and you absolutely have to understand the risks you're taking on.
And that newfound responsibility, well, it was about to get a real-world test. What happens next is probably the most important lesson Alex learned in their entire DeFi journey.
It wasn't even a massive crash or anything, just a little dip in the price of ETH. But that's the thing. Even a tiny market shift can create huge waves when you're borrowing against something that can move up and down so fast.
And then, there it was. The notification that every single person who borrows in DeFi dreads. For a split second, total panic. I mean, this is it. This is the moment that, if you're not ready for it, can wipe out your collateral completely.
And this is the whole point, because Alex had been smart about it, because they borrowed conservatively and kept that LTV low, they had a buffer. And that buffer bought them time. So they were able to turn that panic into action. They checked the numbers, they paid back a small piece of the loan to get everything back into a safe zone, and just like that, the collateral was safe, crisis averted.
So through all of this, the good stuff, the bad stuff, the nail-biting moments, Alex started to build a kind of toolkit, a set of strategies that really anyone can use to get around in DeFi a whole lot more safely.
And this really gets to the heart of it. Being successful in DeFi isn't about luck. It's all about discipline. It means choosing your assets wisely, keeping a close eye on your loans, treating leverage like a power tool and not a toy, and most importantly, always leaving yourself that safety buffer.
You know, once you really get these core ideas down, you can start getting creative. You can start combining strategies, maybe spreading your activity across different platforms. The key is to always balance that curiosity with caution. That's the real secret to growing sustainably. And it's exactly what took Alex from being just a curious newcomer to a really confident participant in this space.
So in the end, Alex's story shows us something really important. DeFi isn't some secret exclusive club, and it's definitely not a casino. It's a toolkit. A really powerful toolkit for sure, but one that anyone can learn to use if they just bring a mix of curiosity and caution to the table. Which leaves just one question, really. What are you going to build with it?